the comments. So I kind of want to like answer a lot of the comments and questions and concerns that people have, as well as explaining who I believe this device is for and who it's not for. And I also want to talk about my experience using them and how I use them. What is the GlocalMe? The GlocalMe is a Wi-Fi hotspot. It allows you to connect up to 10 to 15 devices depending on which model you choose. This is great for local travel and international travel. The best thing about the GlocalMe that I found is its ability to have cloud SIM and ability to put a physical SIM. But I haven't had any success using the local SIM cards, like putting T-Mobile. T-Mobile, I was getting 2G speeds. The Google Fi, it wasn't working. I had to order. It was very cumbersome to try to get the device to work. I've only tried this on the U4 Pro because it has the screen and you can actually access the APN settings, whereas the other ones you can't access APN settings. Yeah, so the cloud SIM, what makes the cloud SIM very powerful is that over 140 countries they have services in. So with the cloud SIM, this means that you don't have to go to the local area and buy a SIM. You don't have to buy one before you go. You can simply just use the cloud and buy the service package to whichever area you're visiting. I'm from the US, so if I was to visit Spain or Morocco, these places I've been, what I do is I go beforehand and I purchase a data plan. The data plans activate once you get inside of the actual area that the coverage is able to jump off of the towers. So that's good. So meaning you can purchase it on a Monday, and if you're not flying out to Friday, you're fine, and you'll automatically activate once you get into the area that you're in. So that's a pretty cool feature that it does that as well. My understanding of how the GlocalMe works is it jumps off of whatever available tower is in the area. And this makes this even more flexible than purchasing a dedicated service provider like T-Mobile, Verizon, AT&T, or whoever your wireless providers are. Because if you have T-Mobile, then you're only going to be good in T-Mobile areas. If you go into an area where T-Mobile isn't, the dominant tower and there's Verizon there, then you're going to struggle. But GlocalMe is going to jump off whatever tower is in the area, giving off the best signal. And one of the good things about the Dual Toro is that this is constantly monitoring all the towers jumping off the best signal in the area. So that's what separates the Dual Turbo versus maybe like this GlocalMe or the G4 or any of the other ones. Regardless of using the dual technology or not, all of them are going to jump off of the best tower in that area. This makes it good for local travel as well. So my cell phone service is AT&T. So if I'm in an area where AT&T isn't the greatest and this T-Mobile is in the area, then I can actually just throw on my GlocalMe. It'll hop off of the T-Mobile tower that's in the area, and then I'll have the best possible internet that I can have. That's what's good about having a wireless hotspot that uses a cloud SIM like GlocalMe versus another hotspot that's dedicated to a certain company. So I do have a 5G T-Mobile hotspot, and I'm going to talk about the comparisons between something like the 5G T-Mobile or AT&T local hotspots where you can just pay like a monthly fee of like $40-$50 a month versus a prepaid where you're paying maybe $10-$15 for like 2 gigs, and the difference in that. And this is going to help you determine if this device is for you or not based on a lot of the questions that I get. So the pros and cons of using a prepaid service like GlocalMe versus a contracted service. One, the pro of having a contracted service is you're going to have like that unlimited data, right? Well, my particular plan, I have up to 100 gigs unlimited. After the 100 gigs, I think it's tethered down, and I pay about $45 a month. To have 100 gigs on this is going to cost extremely a lot more than just the $50. And this is where the pros and cons come to weigh in. And this is where you're also going to determine if this device is right for you or not. If you're looking for something that's going to give you unlimited access, where you're not worried about your data being capped off relatively because of the 100 gigs, but you know what I mean? If you don't want to be worried about paying all that money for prepaid because you'll burn through your gigs, especially with streaming and trying to gaming and all that kind of thing, you probably will want something like a dedicated line that you pay monthly, $50 a month, so you can have unlimited data, versus a prepaid plan like this. This is where one of the questions I got was, hey, is this device good for gaming? Now, you can 100% connect to your game with one of these devices. It has up to 4G speeds, and the new device coming out has 5G speed, so you definitely shouldn't have a problem with that. The thing is, you'll be burning through your data very quickly playing, gaming. So I don't recommend this for a gamer unless you're in an area where you absolutely can't get no service and you really want service and you really want to pay and money is not an option. This will 100% work for you. GlocalMe will 100% work for you. You'll be paying a fortune, but it will 100% work for you. So who is this for? This is for the traveler. Who is it not for? Is not for the streamer or the gamer. Now, if you're a traveler and you're traveling different countries and you want to stay connected, this device is the best device, because a device like this is only going to get you pretty much good locally, and then it's also still limited to the company that it's with, meaning this is T-Mobile. It's only limited to the T-Mobile network. So if I go in the area where T-Mobile sucks, this will suck and it doesn't pretty much work for me. Whereas though GlocalMe is going to always work because it's going to jump off whatever tower works. So that's why this makes this a good travel companion when traveling to other countries and traveling locally when your local network is not working so much. So if you have a cell phone, you're with T-Mobile, AT&T, and you're in an area, maybe in bad area, mountain range or something like that, and that tower just not working, this will help you stay connected locally. Although I don't really have that much problem traveling locally because I can always pretty much get away with my AT&T because my cell phone is AT&T and this hotspot is T-Mobile. So locally, I don't travel with my GlocalMe as much as I used to. The only reason why I actually have this is I use this for work because I'm video production and I do live streaming, and I use this as a backup or sometimes as my main live stream unit if we can get signal. So now that I have this and I'm paying it per month, I use this now. But prior to this, I would always use my GlocalMe. Internationally, I'm 100% taking this. T-Mobile, I'm not even sure if that can even travel internationally. I'm in the US, maybe Canada and Mexico may work, but I don't know. Outside of that, it probably won't work, which is why I have the GlocalMe. Now, my experience using the GlocalMe and the different places I took it and how I used it was, one, I used it for business travel. When I traveled to Italy and Germany, I was there away for months. This was a lifesaver. It kept me connected back home. I was able to connect it with my iPhone, meaning I was able to send text messages over the Wi-Fi. I was able to make FaceTime calls back home, FaceTime video, and FaceTime audio if I want to use phone calls, as well as still being connected to the internet via social media platforms, emails, etc. I also use this for leisure travel. I've used it in Spain, I used it in Morocco, I've used it in Mexico, I used it in Bahamas. Traveled to a bunch of different islands. A lot of some of these, I would say islands, my cell phone provider actually provided like a roaming service. So if I had a roaming service with my phone where like I would have like unlimited coverage, I pay $10 a day, I would use that. Outside of that, my cell phone didn't have coverage, then I would bring my GlocalMe with me. The GlocalMe does not work on the airplane. I've tried 3 different models. I'll try every one I get, but so far they do not work on the airplane. This is basically your own personal hotspot. You can keep your data secure. So when you're out and about at your hotels, instead of using the Wi-Fi in the hotel, you can use this. When I travel to another country, I will use the hotel Wi-Fi or maybe the cafe Wi-Fi. But when you start moving around, like when we're doing tours or excursions or simply just nomading around, meaning you just go somewhere middle of a town and just, exploring on your own, having this with you is going to keep you connected. And having this able to let me connect to the GPS and get to my destination. And I usually purchase a 2 or 3 gig plan to start, which usually will last me, 3 days. A gig will usually last me a day. Just using it for socials, maybe call and FaceTime and text messages like that. I don't use this for like watching YouTube or, trying to stream things, because those eat data. If I can do those when I get back to the hotel or maybe from my phone or something at the hotel, but I don't use that for this. This is strictly to keep me connected to the world when I'm traveling at a good price and prepaid at any country. And that's how you want to use this device. I recommend that you use this device to make phone calls, FaceTimes, text messages, go on your social media via Instagram, Facebook, TikTok, checking emails, just keeping yourself connected to the world. I don't recommend this for streaming on PlayStation or trying to run Netflix or YouTube even. Those things are stream heavy and they'll eat up your data. And simply if you're in the mood, if you're traveling for leisure, and you probably don't even want to do those things anyway. Now let's get into some questions that are commonly asked so that I can get those questions answered for you guys. Some of these questions I may already answer in the video, but I'm just going to run through them. So, hotels, somebody asked, asked about using as a hotel with a PlayStation and how much would the data going to be. The data would be a fortune.
We maintain a very strong IP
Where
position.
do I pay as you go? So to pay as you go, there is an app. You download the GlocalMe app
that we created for that tech in WISE, as well as a lot of new technology that facilitates it being a software-based solution. We are uniquely driven by an interoperability approach, which you'll see some other wireless technologies that are
to kind
either
of 550 range, $550 range for
SOC
max
or
loss.
within a specific
And when we
group of
come to the
products.
monitor
The idea
tab,
behind WISE
we can
is
see that today we
interoperable
have
across all
exited
platforms,
3
across
positions.
all product
So we've
types,
exited a
and
position on
much easier to get
Netflix,
into
we've exited
source
a position on Meta,
and finally,
and
we have
we've
the ability
exited a
to
position on
leverage our
Datadog.
existing,
And 2 of these were for a
data of brands
profit.
that we
So
work with,
I'd like
many or all of which
to
are
start
members of the WISE Association,
with Meta.
which
And
falls under
why
me,
is that? Well, because I
and we
want to
already have a really
do
strong customer base
this
we can
trade that
leverage
we
against
just
WISE,
exited.
as well as
And
grow it,
sometimes,
especially on the source side with TV
you know,
brands
we
and
can
set-top
get out
box
for
brands.
what I call a paper money fill, and sometimes this can happen in a live account where you get out for a
So,
higher
talk to us
credit
a
than what
second
you
about what we mean
requested,
by
and often that will
multi-channel
happen
immersive spatial audio,
if
'cause
it
those
happens in the
phrases
first
are
half
used
hour
a lot in our
that the
industry,
market is open.
but
And
what we really
here
look
we
at
were out
as-
at 7:46
and
Mountain
George
Time,
Lucas
so the
said
market
best
had been
himself. He
open
said
for
over
15
50%,
minutes.
50%
But when we look
of
at this,
the,
we did 2 contracts. We
benefit
were
and
risking
enjoyment of watching one of his
$500.
films was
How
on the
much did
audio
we
side,
end
not
up
just the video
making?
side.
We made 100.
Immersive audio to us means putting you in the
We
middle
made
of whatever action
$140
or music
per
or
contract.
gaming that you're
So we
viewing.
made 280 in
if you're
total,
watching a football
less
game, does it sound
commissions,
like I'm at the
and
stadium?
commissions
If
were,
I'm listening to
you know,
music, does it sound like I'm at
$1.30
the
per
concert?
contract
If I'm watching a movie,
to
am I
get
immersed
in and
that
to get
scene?
out.
If the camera
And
goes
so,
underwater, do
you
I
know,
go
our-
underwater?
our,
does it feel like I'm
it would have been
in that, whatever I'm
260
watching? Gaming is
times
another great
2.
example.
So we would
I
have
want
had
to
to
be able
knock
to hear somebody
$5.20
sneaking up behind me
off
when I'm
that
about
for
to get passed on the
transaction
left.
fees.
I can only do that if the audio
And, you know, but I
experience is
don't
as immersive as the
normally
video
take those
experience,
into account.
or
I
even more
consider
so.
that part of
If
the
you think
cost of
about
doing business.
this
But
right
if you're
here,
doing a
you're looking
very
at two
narrow
dimensions. But if you listen to the room,
very
my voice is
narrow
bound-
spread, like a
rebounding all
50
over the
cent
place. You get a
spread,
feel for the
then
space.
those
What are
can,
the
you know,
walls
can
like?
have a
You know,
bigger
who's around me? How
impact
much of this is
on your
reflection
overall
versus
total.
direct? That
So,
can
you
only
know,
happen
at
if you're immersed in the audience.
$280, we
So that's what
consider
we're trying
that
to
a
do.
base
We're trying
hit,
to make easier
and we're
for
pretty
everyone
happy
on the
campers.
consumer side to create those
You know, because,
experiences.
you know, when you consider our original account value was 20,000, that's over 1% of our total account value on that one trade. And we were risking $250 a contract or $250 a share. So what was our return on our risk?
Familiar with, you know, TV
It
speakers
was,
or a
and I
soundbar,
did the
but
math
last
ahead of
you went to a
time.
movie theater, you didn't see a big black
This
plastic
one
tube
was
underneath the
Meta
screen.
56%.
You were surrounded by speakers.
About
And
56%, and we're
Dolby, with
aiming
Dolby
for
Atmos,
50.
Google with IAMF, and yes,
You know,
they're
with
changing
this,
that name.
even
They told us a few
though,
weeks ago,
you
thank
know,
God.
if we had
And
stayed in it,
Experience
what was our
ETFX,
potential max
they're
return
delivering
was
audio
100%
experiences
return.
in these
But we decided that we're not going to be
multi-channel
greedy. We're going to
and
go in for
multi-dimensional
little
formats.
wins,
And it's
hopefully
not
get
just if
in
you
and
go to
out
the movie
quickly.
theater,
We
and
were
it's not
in this
just
one
if
for
you go buy
14 days.
Blu-ray. It's
It
streaming
expired
into our homes
July,
on a daily
it
basis.
was set,
And
the expiration date was
just
July
movies,
5th.
it's TV,
So we
it's
still
games,
had 2 weeks
it's
left to go.
music.
Okay,
It's sporting
so
events.
we got out in half the time.
And so we're
And
getting this
AP
type of
514, thank
capability
you for
already presented into our homes, but what are we doing with it from an audio
checking my math.
perspective?
Always a good
Where do
idea.
we sit?
Okay,
Well,
so
we just
now
talked about
with
streaming into our
Meta,
homes,
it's like,
so all
okay,
these
well,
content
let's go
guys
look at the
are
chart.
producing all this
So when we look at the chart
movies,
on
music,
Meta,
all
we
the
can
things I
see
said,
that,
in
you know, it's
multi-channel
up
audio. They're
41%
not
year to
just giving you
date,
left and right.
and
They're
it's
not
up
just giving you what I get in my AirPods.
7.5%
They're
this
giving you
month. But
multi-channel.
it
They're
kind
giving
of
you a
came
subwoofer
up,
channel. They're giving you
and
center,
then
left, right.
it
And in some
came
cases,
down
they're even
on
making it easy.
earnings and
Dolby
has
Atmos
worked
has a
its
new
way
pro-
back
new
up,
solution
and
called
we've
Flex
seen
Connect
that,
you can even
you
place
know,
speakers in random
this
spots, and it will figure
was
all
a
that out for
support
you.
level. So
But you
let's just
still
kind of
need
hone in
multiple
here.
speakers to do that.
And so,
That's
you
all
know, when
happening,
I
and it's
kind of
being
look at the
embraced by
charts
YouTube
and I'm
and
playing a
Amazon,
bit of
Hulu,
that, you know,
HBO,
I
and they're delivering it
spy
to you over
with my little
infrastructure that
eye,
already
I'm
exists.
saying, you know,
Fiber
this
optic
looked like
right
it
into
was
your
a
router,
support
streamed
system,
around your home and into
you
your
know, a
TVs.
support
The
line,
TVs are
and
now
then it
decoding
became
all
a
that with
resistance
Atmos
line.
and DTS:X
And
all the others.
could we
Then what happens?
have
Does it
the
just get played out of this,
expectation
little
that
plastic
this
speakers in
line
front
might
of the TV?
continue to
Does it get
hold?
played out of that
And
sound
could
bar?
we come in
That's been the
here
restriction so
and maybe
far. Or you
do
can
a
spend all
short
weekend putting
put
together one of these
vertical
elaborate wired systems that takes forever, and hopefully you got it right.
at 480?
We solve all
Like,
those
would there
problems.
be pay enough
so we're
premium,
now capable of being inside the TV,
expecting, with the expectation that this might continue to hold.
inside the cell phone, inside
Okay.
the tablet with WISE-E.
So let's go in and have a look. And then what's the other thing that we see on the chart that we should be aware of? That's that little blue dot.
So we're not requiring
because one of, with our example trading plan, and if you're saying example trading plan, well, just a minute, no one told me about that. Well, we're creating a number of example trading plans, and I'm putting them in the trade management mini session folder. So that's one of the reasons you're going to want to hit that subscribe button in the bottom right if you haven't done that already, so that you will get, you can easily access that. So let me just show you.
That comes considerably down in cost when we go to WISE. So you'll see this dais grow.
So you just, what you want to do is just bring up a new, search and type in Trader Talks.
Somewhere probably in the 30s.
And we want the Trader Talks Schwab coaching webcasts. And when it first comes up, it will bring up whatever class is currently running, which is our class here. And then you're going to come over to the playlist. And I have been a bit remiss. I've been doing a little vacationing, but I need to add another one. So maybe I can get one done today or tomorrow. But we've got two trading plans, one for short put verticals and one for long call verticals. Now, especially with a short put vertical, when we get close to earnings, volatility goes up, and when volatility goes up, the price of an option tends to go up with it, and so some might use a short put vertical to trade over earnings. Other people, and in the example trading plan that we created, we said we want a higher probability, try and create a higher probability, lower risk trade, and so what we want to do is avoid big move up, and you saw like here, Meta had a big move down, and yet it was up, it's up 40% year to date. Like prior to earnings, it was up even more than that. Might we have expected it to go up? And had we placed that trade, a short put vertical trade, we might have had a max loss. So earnings is the 24th. So if we come out to July 19th, that's 25 days. We'd say, okay, well, we'll be out prior to earnings. So check.
When we talk about universal wireless
and we have a support level around 180. What is our probability, and if I close this, what is our probability of it being in the money? About 26%. So that means we've got about a 74% chance of it expiring worthless, but we have a 50% chance, 53% chance of it at least coming in, giving it a kiss. Touching that. And so if that happens, do we freak out? We do not. We know that, there's a decent chance that it might do that. But a 26% chance. So, do we have more than 1 million shares traded? Check. Do we have a tight bid-ask spread? 20 cents. That meets our requirements. It's under 10%. So if we look at selling a vertical, and then one of our guidelines is we want to get at least a 25% return if we're in it for 25 days, a 25% return on our risk. Well, what are we risking? Well, we're risking $5 minus, let me go with $1.15 because I think I can manage that math. So to calculator. So if I say if I could possibly make, that's my max gain, and I divide that by how much I could possibly lose, which is 385, that's a 29%, 29.8. We could round to call that 30% potential return on risk for a trade we'd be in for 25 days. So we're saying, okay.
Software is the key.
There we go.
That our first technology was module-based.
That meets our criteria. And how many of these can we do? We can only do one because we're risking $385. And if we did two, that would be, 700 and something. Yeah, so we're not risking $700 on one trade. That would break our position sizing rules. So, but the other thing we do is we say, hey, when we got 80% of our max gain,
of the 150
we're going to exit the position. So we're going to create an opposite order. And I usually just do the math in my head. But, if you wanted to get your calculator out and give it a flex,
So we're making it very.
You could say, okay, when this is worth about 23 cents, I'd like to buy it back and just take my risk off the table. Now, what if we get to expiration week and we're still in the position? We might say, hey, you know, or what if next Monday we come and we look at this and we go, hey, we've got, you know, 70% of our max gain and we're only a week into this. I think that's good enough, especially if it looks like it might be starting to pull back. Just because we put this in as a target doesn't mean we can't, you know, make an informed decision and change our mind. Yeah. So it doesn't mean we can't, you know, make an informed decision and change our mind. Yeah.
So
the 380 in risk is this $5 minus the $1.50. So if I take
royalty-free,
5,
but it opens up the door for attachment.
With things like set-top boxes, minus
of the 5
$1.15,
a leading set-top box manufacturer. And by set-top box, I mean a cable box.
That's 385. So that's where the 380 in risk comes from. Because if push came to shove, you know, if the stock was put to us at 480, because when I sell a put, I'm agreeing to buy the stock. If it was put to me, then I have the right to sell it at 475. So even if Meta tanked, like it did, you know, on the last earnings, and it came down to 440, you know, as long as we're prior to expiration, you know, I have the right to sell it at 475. So my risk is defined. And then I'm getting paid $1.12 to place the trade. So that comes, you know, the $5 difference is, I subtract what we're being paid to get into the trade. Okay.
The use cases on the consumer side, right?
I'm going to make this good till canceled. If you are new to this strategy, there's a series called Getting Started with Options, and I think I just did short put verticals last week. So you can go in and do some binge learning or binge brushing up on these strategies if they're newer to you, because this is an intermediate level class, and I'm assuming that you're familiar with these strategies, you know, these verticals, because we do trade a lot of them in this class, and I do, you know, I do place, tend to place a lot of trades, just to give you a fair warning, you know, so, but I love the question. Okay, and I love Paul saying I speak typo. I think Scott had a typo, or AP 514. That's great. You guys are awesome. Okay, so that's Meta. We reviewed one and we placed one, and then
we can actually have.
Let's look at Apple. Now we already have a long call vertical on Apple.
Are starting to add even some of those.
And so let's come and look at that. And what happened is we put this long call vertical on, and then it kind of got it kind of got hit. So we're down 41% on this. And you might say, like, yikes, why would you be considering adding another one? Because we placed this one at 215 and 220, and now it's below both strikes.
We're inside the TV,
but it's moving to the upside.
Adjustments, the set-top box brand, the projector brand.
And so, you know, we might, you know, some might consider, you know, placing another trade. But I think what happened is we placed this trade and it pulled back. And then I was away, so I wasn't putting exits in, and it's now moving. Now others might say, okay, I don't have a trade on, but I'm not looking to add. I'm not looking to add to this until we see how this one works out. And our strikes on this one.
So licensing process.
Are at 215 and 220. And usually what we're doing is we're trying to straddle. And by that I mean chances are it was between 215 and 220 when we placed this trade. So it's still got some recovering to do.
They've vetted it.
215 and 220. But we are now no longer below 50%, so we're going to just let that one
the modules for the RX
kind of mosey along, because we've got some time on this still. We've got 3 weeks. It's, you know, and this is one of the advantages. If you go out a longer period of time, and when did we place this?
You know,
we placed it on the 17th.
know what you know about.
So if we come and we
TV
look
space
at
and projector space and all those things, but it's cutthroat.
the 17.
And there are aggressive new brands all the time. They're looking for a leg up.
So if you go back and you look at this and you say, well, you're under, like, did it make sense when we were placing this trade? It had a big move to the upside, pulled back, it was moving to the upside again. So the entry made sense. Now we just have to have the patience to wait it out. Yeah, John is saying, you know, when it went 50% below, so if you're out of that trade now and you're saying, well, I exited that trade and I took that loss, if I were to enter a trade now, where would I put my strikes? Well, you might look at this and say, I would do the 210 and maybe the 2...
Each one of those attachments is 2 to 3 speakers, each one of them having a module in it. The number gets pretty impressive pretty quick. I also think that the 2 to 3 here, love the laser pointer, probably looks more at the soundbar market, where you're buying a soundbar or a soundbar and a sub, or soundbar and sub and rears, more so than a separates market, which is what we're talking about. Yes, you could still use our tech for soundbars, but if you can add a center channel, a subwoofer, and rears, that's 4 speakers. We can go all the way up to 6 to 8 speakers per TV. Now, that won't happen for every TV, but it could happen for a certain percentage of them, which brings that 2 to 3 number up. And lastly, a little bit of guidance. We believe that the licensing agreements that we have, the 5 in place, will start to affect our revenue in the second half of this year. We also believe that we could see some momentum from the other 3 to 5 that we plan on getting. And interestingly enough, we've also seen some of the initial WISA technologies, the WISA HT technology customers, selling through some of the inventory issues that they had based on due to the pandemic, and reordering that module as well. And those are higher end systems, the more expensive module, but we are seeing some reorders there. Got about $8 million in cash after our May 21st reporting, which we now meet the minimum bid on NASDAQ, and we've made some significant increases to shareholder equity based on some recent raises. So we've got what we need for the rest of this year, and we plan on seeing some substantial uptick in the second half. So just in closing, and I've been in this industry for quite a while, WISA E is what a lot of people have been waiting for, to fix all the issues of how do I get all this great content that's coming into my TV or other source to speakers easily.
Single order, first trigger sequence, right click, the new opposite order, and it's soundbars, so 125 times 1.5, that's $1.87. So
the audio that's coming into our homes can afford.
We're going to make this.
So to really realize what is being streamed into our homes, we
this
need an easy solution to
make
it multi-channel.
Nope. I was going to say it may trade in 5-cent increments. It's at $1, so I'm going to round up to $1.88. Confirm and send.
Great audio.
How much are we risking? 512. How much could we potentially make? 488.
Anyone have any
But
questions?
we're saying, hey, if we can make $60 a contract, so if we can make 240 of that 488, we're going to consider that a win.
Yeah, just
long call vertical.
3 or more. Okay, and 3 more additional ones.
Send that in.
All right. So
now some might say, like, I just placed a trade and exited, and that was a losing trade. Apple is dead to me. Well, like Apple doesn't care what you do.
What an impact might be.
Tim Cook is not tossing and turning, you know, over, you know, one losing trade. So it's kind of, if the setup is there, sometimes we have trades that aren't successful. You know, and that's kind of the way the cookie crumbles. So we're going to put this in, and if you're saying like, hey, I'm about to go out golfing, I want to make sure this fills, you know, it's at 127.50 and we've offered to pay 128, so we're just going to give it a minute. You know, and if it doesn't fill by the end of the class, then we'll go in and we'll look at that again. Okay. So how about we look at Amazon? So we did another look at a current trade, place a new one. Okay, so we're just gonna have a quick look at this. Now, if the market were really trending sideways, might we be tempted? Because, you know, if we're playing I Spy, one of the things I'm seeing is Amazon has come up and hit its head now on this 189-ish, 190-ish level 4 times.
Which we've had a lot of success with over the years.
175 seems to be a bit range bound. The one thing that has me kind of going, is that the last time it came down, see, patience is a virtue, right? It didn't come all the way back down to this 175. It only came down to 183. So it may be setting up to shoot up. But some might look at this and say, oh, could we, you know, do a short here? No, the reason we're not going to place that trade is because the overall market is still, even though it's pulled back for a few days, it's uptrending. So, and this is, you know, a stock that's in the, you know, the hit parade. And what do I mean by that? It's in one of the top 3 sectors. And if you're not sure of what sector something's in, we can come here and look at consumer discretionary. And remember, when we were looking at our sectors, consumer discretionary in the last month had rolled into 3rd place. And so it's kind of counter. It's counter to the market, overall trend of the market, counter to the overall trend of the sector. We're not saying,
okay.
And so, you know, when we look at that, we might say, yeah. And somebody's saying, well, could this be a cut handle pattern setting up or an inverse head and shoulders? I like the way you're thinking.
We don't know how.
Thank you, see me go. And somebody else is saying, well, I could see, you know, an ascending triangle. And absolutely. So, you know, if we come here, here's our ascending,
so you're basically saying all 3 of these manufacturers, all 5 of them that you have.
That could be our ascending triangle.
Well, they're not all
this could be, you know, a cup and handle.
The ones that are TVs. Yeah.
Let me erase this.
One's a high price, the whole
here's our cup, here's our handle.
Because for us, the more the merrier.
You know, or kind of double bottom.
Okay.
Now,
but we don't have the breakout yet.
Make it interoperable. So
no breakout.
5 years.
So we're just going to be patient. We're going to wait.
Make it interoperable.
Yeah, it looks range bound to me too.
That's not part of this licensing agreement.
But because of what's going on in the market, sometimes we have to look beyond that.
So
beyond just the chart we're seeing, like what's going on in the market. So because of that, and because there are other ways we can look at the same pattern, we are choosing to do nothing. And I usually throw in a couple of
all of their
do nothings
are interoperable with any transmitter.
You know, so when this breaks out, could you do a covered strangle on it? We could do lots of different things. We couldn't do a covered strangle in this class. It's too expensive stock. It would take, you know, potentially, you know, wipe us out. But so that's Amazon.
But they only work with Bang & Olufsen.
How? So I want to look at Netflix because we just exited a position on Netflix. So let's go and look at that.
To work with everybody else. A TV brand that would say, okay,
now it's really interesting because what happened with Netflix is we have this long call vertical and it's been trading above the top strike. And then today it opened, our strikes were at 675 and 680, and we look at today's candle, it opened at 685, and so we got out early on this because we had a target. And so, you know, we got out of this early because we had a target, and so how did that pan out?
Here's the next question.
This is what you may call a paper money fill because we got out for 515 and our max gain should be 5.
Why there's a limit to 6 to 8.
So this would be a fairly rare thing to see in an actual account. And that wasn't what we requested. We requested to get out at 382, but this filled you know, in that first 10 minutes, the market was open. And this is why I don't like to put in those exits, because you can have this crazy volatility. And sometimes, you know, if we get out for something like this, we're going to take that hit. But what if we got out for way less than 50%? You know, that can happen too. And so when we look at this, you know, we did really nicely on this one. We had 2 contracts
with the bandwidth that we're
here.
working with.
We got in on the 17th, out on the 24th. The expiration date was in July, but we ended up by $260
each one of those channels could be picked up
on a risk of 255.
Another set of rears.
So our return on risk
it would just double
on this one was just over 100%.
Hey, thank you. So I've seen you guys present over the years.
You know, so, you know, I wouldn't even call that a base hit, because if we were up by $520 on that one, you know, that's a double. And I spent a lot of time with my son-in-law watching baseball this week, so you can quiz me on baseball. It was fascinating. I learned a ton. Cannot wait to talk to a fellow coach, Kevin Horner, about his team in Colorado, because I watched part of that series too. Anyway, I digress. So that was Netflix. But and so whenever something like that happens, I want to come back and see, like, is there an opportunity for us to come back in? And I would say yes, there is, but not yet, because I see like kind of like this almost.
It was module based, and again,
you know, and you may have to stretch. You may not see this, but I see kind of a bit of a like cup and handle-y kind of thing setting up here, but it's definitely, you know, up 37% year to date. So if we got like a spinning top or this candle indicating that this pullback is complete, could we maybe do a short put vertical around that 655-ish level, because it came back and it kind of skidded along here multiple times, right around the 650, and then broke out. But I would say this is, you know, patience little one.
Are waiting for something to send. Bluetooth headphones needed Bluetooth.
Yeah, so you know, Trade and Grow is saying, how did Netflix get that credit?
And if you look at
Scott, have you seen that happen in a live account? I can't remember.
They're making Bluetooth systems, and they're making soundbars, and they're battling TV brands that are
so and it may not have filled at all. Like that's another possibility too, and then you could even be down on the trade where you're sitting now if it didn't get filled.
Content streaming into your home.
So, but that's what happened. And so sometimes paper money doesn't totally mimic what can happen in a live account.
That's only possible now because we're starting to get into the source.
Let's go look at Lily.
So the 5 licenses have only happened over the
last 5 months. So with Lily, we're just like marching on up this hill, right? And we've got earnings coming. Earnings, though, isn't until August 8th. So we had done a long call vertical on this back with an expiration out here. And I'm assuming that one probably went just along according to plan. But we had this 2-day pullback. We have this, it's trading above the high of the low day. So could we maybe go and do like a 900, 905? Now, it's possible. Sometimes when stocks are this expensive, though, it's a $10 wide spread. So let's come and look.
Now that we're firmware.
So if we came out here, we could do a 900, 905, but we have only 2 contracts. And the bid-ask spread on is kind of wide. And you know, this one, but it's not much wider than this is, isn't it? But it's about $1.50. So it's still under 10%, but we have a lot more volume here if we did the 900 and the 910. And it's sitting at 901.98. So let's see.
Because I've been here for 8 years.
Because remember, we don't want to risk more than. So that's 250. So we could do that trade.
And some of the guys weren't even worried about the $8 to $10 model.
Now, if we did the 900, 910, in order to get
this has got to be the last question.
our full gain, it would have to go up by. It would have to go up through to
not about the
910.
when you're launching
But it
it,
is
so the
up
next
trending.
release
It is up
launch it. So
54% year to
I have
date.
understanding about your OpEx
And, you know, in
cash
an
flow.
average day, this stock, the range is about $18. This is our ATR. And so if we did that 10, it would have to go a little further. You know, where with the 905, we're still at a 50-50 gain, and it doesn't have to go as far. And so when we look at the probabilities, the probability of it getting to, of it being in the money at expiration is, you know, 48%. And you've got a 95% chance of hitting it. When we go to the 910, it drops to 87 and 44. It's still a pretty high probability. But if we went with this one instead, the 900, 905, how many could we do? We could do 2. And then when would we want to get out? At about 375. You know, if you do a lot of these, you could call it 370.
Now I see why. I didn't know that. I went to go buy that because I was gonna. I was like, I'm gonna get it myself.
Well, actually, we could make it 360. Well, we're live. So let's just we'll make it 375 and call it good enough.
We're gonna have to get this.
Good till cancel. Confirm and send. We're going to put this in our long call vertical bucket. Our max loss 506, max profit 494.
It's stable
long
though.
call
I like
verticals,
this thing.
Fire in the hole.
Okay, there we go. So put that in the bathroom so you know when you wipe the lid, you know sometimes the lid be. So
now you know tomorrow. I forget which strategy we're talking about in getting started with options. But if it's a bullish strategy, I think tomorrow it's short call verticals. So maybe we'll look at CRM tomorrow. But we've got Walmart, which split recently. And then kind of went sideways for a while and now seems to be on the move again. So if you were looking for another practice opportunity, this might be it. Now, if you want to look at a bearish neutral strategy, join me tomorrow for getting started with options. And again, like I said with a bit earlier in the program, we have our trade management mini sessions, and eventually you'll see a trading plan, an example trading plan for every type of strategy that we trade in this class, and every type of strategy we trade in getting started with options. But if you come here today, we look at a long call vertical, which we haven't covered yet in this rotation. We did short put verticals last week, but we can come up here, and if you want to, a refresher, there's a whole class dedicated to that, just to the basics on long call verticals, basics on short put verticals.
Oh, okay.
Okay, so here's my ask of you. I'm asking you to hit like. What that does is it moves this up in the algorithm so more people can find this content. So it's a chance for you to do a favor for a random stranger without even leaving your desk. So I'm asking you to do that. It also lets Scott and I know that you found this content valuable. The second thing, hit the subscribe button if you didn't do that earlier. It gives you access to all the stuff that I've shown you, and makes it's where I go to sign in when I'm riding shotgun in the chat. So it's just an easy way to find all our webcasts. So you want to do that. You want to put Wednesday on your calendar for the market outlook. And then last but not least, you want to follow us, excuse me, in the land of X. My handle, Barb Armstrong CS. Scott's is Scott Thompson CS. So Scott, thanks for joining us in the chat. Thanks to all of you for bringing this class to life by being so engaged. I really loved all the questions today. Glad to see you all tuning in. And for those of you watching this in the archives, kudos to you, your future self. Well, thank you for the discipline that you are showing engaged in showing up today. So guys, have a great day. I'll see you in a webcast coming up soon. Take care, everyone. Bye for now.
That'd be cool. Have a little astound thing if they trying to show love, or that's it. There's another bill.
Another bill.
Oh, okay. I thought she was saying
$90 for all 3 phones. She said.
All 3? Mm-hmm. But we don't. We already have people phones. I mean, we
pay $300 and something for this.
I know, but you still got to pay them. Remember, that's because you paying on them.
No.
You don't own
my
them.
My phone is on. My phone is not. I don't pay on my phone.
Okay.
$185. So we pay send them that phone back. That's paid for.
Good morning, everybody. Welcome back to Schwab Coaching. It's the Monday edition of Trader Talk in today's market. I'm your host, Kevin Horner. It is, of course, a beautiful and sunny morning here in Denver, Colorado. Today, we are lucky to be joined by my friend, Schwab Regional Investment Strategist, Rachel Deschelle. Hey, Rachel, it's great to see you again. How are you this Monday?
It's great to see you. I am doing well. It's a beautiful day here in Greenville, South Carolina as well.
I'm guessing that's not uncommon either. Fair to say?
Definitely not. Yep, it's always beautiful here.
Awesome. Well, we hope that all of you have had a fantastic weekend. We are ready to get back to business with you all. We're going to dive into a look at the way things are appearing in the market as we kick things off this Monday morning. But we, of course, would love to hear from you in doing so, everybody. Today, we've got Connie Hill in chat. She's going to manage things for us a little bit here, try to help us out with questions we are unable to get to, but we certainly think we can get to a number of your inquiries, comments, etc. there in the chat function. Please feel free to drop those comments throughout the discussion. Additionally, if you have an opportunity, I'd love your follow on X. You can do that for me at Kevin Horner CS and for Connie at Connie Hill CS. At this point, we don't have Rachel on X, but don't get too comfy, Rachel. I would not be surprised if down the road you're going to be on X as well. So make sure you follow on your little application, everybody. Of course, don't forget to make sure you're subscribed to the Schwab YouTube coaching channel. We've got content for you every single day of the week. So a good follow there would be for you, and of course for us, keep us nice and high in the algorithm as well. So we appreciate that. Now, before we move into our discussion, as also some logistical details first, remember our only informational education. We're not in the business of making recommendations. So remember, first opinion, always sure that notice. Of course, we've got technical analysis here. We remind you that technical analysis is complementary in nature. You don't research, don't make decisions exclusively off technical analysis. And further, remember that we're always working in a demonstration mode of platforms. Thinkers on desktop, on the course. But if you're thinking about anything you see in the settings here, just make sure decisions are based on life data. That you're working on life data when doing a trading course and basing your decisions. So good reminder. Well, so if you are new to the segment, everybody, we kick it off with a broad market review. We also try to get separate for you, taking a look at the details we learn later. So we try to get a picture of the relationship between the a little bit to understand where we find opportunity in the market. So we do that. And we also have an opportunity for example, we have a few individual positions. Now let's talk about which traders might conceive of adjustments in their individual positions, ways they might think about exiting those trades, profit or loss, and just kind of helping along with the concepts that traders might employ as they're working through their day trade process. So that's what we have set up for you today. We're going to dive in with that S&P 500. So let's start there. We go. Take a look at what we've got today. Look at the market started. 31 as you take into the trend, which outside of me, still looks pretty strong to many of us, I would think.
I think it looks still pretty strong to me as well. I mean, we talk about the context of the longer term trend here. We are still making higher highs and higher lows. And if you're a traders that likes to use some of those indicators that we can document day in, day out, on the show about looking at the averages and things like that, you can see the 20, the 50, and the 200 are still in an upward sloping trajectory there, and we are still at 20 moving average too.
Yeah, you're not at all. The difference from the 20-day, which today appears to be, let me just add a little time here. So we're 50% beyond the 20. 20 is an orange, everybody. If this is visually a little new to you, just you can detail along here. You can see, so I'm just, my cursor was right at the orange, that's 70 there. So we are 125 points from that. It's going to be a great drawdown, probably the equivalent of a whole back towards the end. But one of the notable things here, as Bobby's pointing out, if you look at visually, it's hard enough to get a potential bull flag. I just last week here. It's like higher, hell, new high, it's very brief pullback. So if you're not feeling comfortable, but you're a short-term trader, it's hard to look at this as anything other than bullish. So maybe more seeing the course, Rachel, as opposed to looking to head the exit per se.
Exactly, and my favorite quote comes to mind here: "The end is your friend, but the end is." So, right. And all you can really do is, I mean, if you want to have a system in place, always manage risk, things like that. But the trend is like your friend's events.
And don't yet have a bend. Real quick, where is spot that you might be monitoring for that so-called bend? Right? Where would a trader maybe alter the viewpoint of the uptrend we see here?
So I would see some near-term kind of support signals that I would see there. From the other week, maybe that gap level around, I think it was like the week of June 10th, yep, right there where you're marking there. That would probably be the first support level I see there, and then that 28-day moving average for the short-term traders.
Okay. I think a lot of traders probably find themselves in a similar boat. I think many traders would agree with you there. And in all honesty, everybody, I think the thing we have to bear in mind for those of us maintaining long positions in the S&P 500 here is the move we have to see in order to break the trend that's really working since October, late October, early November lows, right? If I draw that trend line and capture these lows, everybody, you can see it's essentially that 50-day moving average is where that trend line kind of resides, right? So that would be a very comfortable area for traders, bullish traders in particular, maybe are looking to deploy new money but are uncomfortable doing so at the 500 ballpark, right? And the reason for that, if you just put money on the table right now, you gotta write it down that 50-day moving average, that would be a heads up. So I like the wrong drawing here. Let me remove my oval there, my second oval, and make this a trend line. And we just look for where we are at 54.64 approximately, and drop down to the 50-day, about a 4% move. See, if you look at the data in box, everybody, 4.1% drawdown. So, 4%, 5% off highs. We don't concern ourselves generally as trend traders with 5% drawdown. We're really moving into that 10% correction territory or something larger than that. And so, I just like to remind all our viewers as we're doing these conversations, thinking about trend, the importance of doing the math, as I like to say. Knowing how far you can fall and still maintain trend, and then further recognizing that just because you've fallen that 4 or 5% through the trend line, a hard thing for new traders to find, Rachel, is that when you make a move like that and lean into the most recent activity, it's really easy to be bearish after watching a 5% drawdown. And yet, when you're drawing down 5% at the beginning of the average, that's time to be bullish, not bearish.
Yeah, I think it brings in the subject of taking emotion out of it, having a plan in place, where to add more human capital to markets or to a specific position, and where you're going to take soft people. So in your case, if you have a normal pullback, that's even less than 5%, that'd be a time to find weakness, some strength here and see that.
Yeah, absolutely. It's a good mindset. It's not the easiest mindset to get to. Oftentimes it requires a little bit of mistakes here and there. You know, I know I've made my fair share of mistakes, but everyone who's made those mistakes probably realizes that those mistakes help us learn and certainly better the next time. They tend to stick with me a little longer when they don't work well. They make good learning lessons. So let's see how this release what we're seeing in the NDX and NASDAQ 100 here. Bring that up for us. We've had some great moves, but really it's not a lot different. We got that same gap ledge, which goes right back to the, interestingly, oddly, some suggest, right back to last Fed announcement. And at a time when they told us quite clearly they were willing to let rates stay higher for longer and we get as few as one cut this year, one rate cut, potentially when the thought was previously that could be 2 or 3 rate cuts. And yet markets still use that as the sort of gaps and moves to the new high. So again, that gap ledge pretty important.
Of course, yeah, you market pricing something, we started with that 20 right there, but like I still have somewhere down here, still with higher highs and higher lows, moving averages and up from there. The thing that kind of catches my eye as well is down below, we're kind of at that relative strength index. We are seeing that we kind of come back a little bit from the overbought levels, we're about to about 80, looks like, and kind of making that move down below that 70 level for about.
Yeah, that move by itself, some RSI utilizers, individuals coming into that a little, uses move you're getting today. If this pullback continues, we're off a 0.25% here. But the move of the RSI, if you're looking for a sell signal, some traders using the RSI would say that a close below the overbought condition at that 70 line. If you're above it for any window and then you go back below it with the RSI, that becomes a potential short-term. I'm getting that specifically a short-term potential sell signal. The reason I call it that is what it might imply is not a reversal of trend, but a potential pullback or softening, if you will. And that could easily happen not at that level, or even if we were, we could say if that's zone inside the gap, right in here. Nice little space of potential support between the gap and 20 moving average. And I really hope you remember, Rachel, if we get too fine with our levels of support and our strategies, we can commonly find ourselves kind of being taken out of positions inappropriately or being unable to trade as long as we like.
Of course, so it avoids us being talking about you mentioned. I will kind of mention one last thing too about momentum. I read an article that says the most bullish thing we can do is go to a lot of scale base. That's something that we do. Like this get about is when the market is making highs of capacity. We want to see strong momentum. We want to see those overbought levels. So it may not necessarily be a particular sell signal.
Money Buddha. Money Buddha. Dale. Dale.
I can live here. What up, y'all? It's your boy Slim Thunder, better known now as Big Slim. People know me from doing a lot of underground music and still tipping and check up on it with Beyonce. A lot of different records I did throughout the years. I'm a young Houston native. I was initially accepted to TSU when I first graduated.
Yeah, I mean, I know y'all see me right here. Got this little look. Little college. Like I said, I went to college. I think y'all see me with the I should have went to college.
I get my second chance to come back and do this thing right. Oh, wow.
Isn't that what I do, man?
Yes, sir. Oh, my God.
You are.
I'm Slim.
I don't know Slim, so maybe I can Google and get a little bit more info. I'm Dream. Nice to meet you.
Nice to meet you, Dream.
Dream Dog.
I met you a couple times, right?
Really?
I think so. Look, I don't know if I've been in a deal. I might have given a comment, but the part I was like,
Allegedly, Slim said that he had kept my DM. So I was going to search, and he deleted it. I should have checked my DMs immediately.
she is a fine female rapper, man. You know what I'm saying? So now she is in my house. This is the great room. BB Leaks and Dream Dog in the same it's about to go down, man.
You don't know, so do you mind switching with me?
Switching? You can come visit whenever you want.
And we're gonna really get an education. Education. So, see, kids, you know how to wire. Making a mimosa will make you a mimosa. Okay. I'm 5.5 years old. Stacey no longer does any kind of drugs or any kind of drinking, which I can totally understand. I'm definitely not drinking around you. No, don't drink. No, it doesn't affect me. You come around me if you're not gonna have a drink, but you let me have my drink. You know what I mean? I'm gonna have your drink. Like a drink is needed. Are you hungry this today? No, I ate. Thank you. We got hearts. Yes. I live for the fellas on hearts, honey. What's the body count on your sex life?
Everything.
In your whole life. Lamar, stop playing. NBA players get to have a lot of sex. How many times you been to jail? Shit, I did 8. I did 8 hours. Who in the girl would you swap bodies with for a week? Stacey Dash ain't talking to nobody. Come on, sexy. Hello? Stacey, you don't want to play no games? No. She's big, distant, weird, mean. Cheers. Stacey is very much rubbed me the wrong way. We barely just got here, and Stacey is acting like I don't want to sit with y'all. I don't do well with that kind of interview, so I don't know how this is gonna go. Ooh, I don't know what that was, but that